Bonjour.
Good morning. We are delighted to welcome you here this morning. May I remind you that this conference is being streamed over the net, so we will essentially take questions in the room, but those who are on .com will be able to ask their questions online. To present the half-year accomplishments and results, we will hear Mr. Henri de Castres, our CEO, and David Duvergne, and also Nicolas Moreau, CEO of AXA France, Jean-Laurent Granier, in charge of the Medlines business line, and also we will listen to Véronique. The floor to Henri de Castres.
Bonjour.
Good morning. I am delighted to be able to comment the results of this first half year. And I will begin with the highlights. What are they, in fact? This first half of the year demonstrate that we are able to ally growth and performance. At the beginning of the exit to this crisis, which was a very lengthy ordeal and difficult for financial institutions, I think that H1, throughout our businesses and in all of our geographies, we have demonstrated that we are able to reconcile both. If you look at the three major business lines, of course, life and savings, P&C, and asset management, you will see that growth is quite significant. In life and savings, plus 9% for new business, which is a number that we hadn't seen for a while. Very reasonable and sustained in P&C, and we will return in details to what this covers with, of course, our underlying earnings that are improving here. Asset management had suffered in the 2 or 3 preceding years, but the transition, quite significant now, to positive inflow increases the number of assets under our management. In terms of volumes, we can also see here a growth in our underlying earnings of 16% in total, 11% based on the share basis. And you see here that this is a plan where we intend to have a growth of 5 to 10% of our earnings per share every year. To back these numbers, there has been, of course, strong support to our clients on a daily basis, very strong presence of AXA in its core business. We are the first global brand with over 100 million clients. This is a very important component for us to attract new clients and serve them well. What does this mean? If we look at our contribution to the economic performance over the first half year, we here have paid out a little under 6 billion euros to our clients in protection and health. 1.9 million clients, of course, were covered by AXA assistance. In P&C, we have paid out 9 billion euros after claims. This isn't just paying claims. Our goal is to prevent their happening in the first place. But when they do happen, we are there to try and minimize the economic consequences. And you see that 9 billion euros is a very significant amount, which is the illustration, as you will see later on, the role of economic stabilizer played by insurers in the economy and in our financial systems. We consider that these are not systemic players, but rather a factor of stability. Last element, if we look at our general funds, here 2.4 billion euros in the increase of our clients' savings value, wealth created for these clients over this first half year. Now, I said that our brand is the first global brand. There are 3 illustrations to demonstrate the efforts that we do to maintain this position as leader. First of all, digital. Today, it is trivial to say that digital is of strategic importance, but this is true in the services industry perhaps more than elsewhere, because this involves improving our relationship with our clients, simplifying it, and we consider that from an operational and strategic standpoint, both, it is certainly a project that we will need to accomplish over the long term, and we are in the right position to do so. Second highlight around AXA's reputation, brand, presence with its clients, the corporate campaign that we have launched for the first time since 2008, and that you see regularly now in the media. Last component, the launch of a new brand on 400 agencies in France to illustrate the transformation of our network and the fact that digital is not being implemented versus our traditional networks, but on the contrary, by accompanying them, supporting them, and trying to increase their performance and efficiency. So behind these first 6 months figures that are strong, we are pursuing our efforts in favor of reputation and deeper rooting of the brand. We also play our long-term contributor role. I was saying earlier on that insurers are economic stabilizers, but they're also essential in long-term funding of the economy. You know that we had announced that we would be funding mid-caps, mid to large cap companies with banking institutions whose role is being slightly modified by Basel III, in fact. And here, of course, we have worked with Commerzbank and Société Générale on this issue. They are growing, and they made it possible for us to fund several of these projects, which is a very positive point, both for the companies benefiting from the funds and also to grow the assets under management at AXA. In the coming years, we intend to strengthen our investments in infrastructures because the need of infrastructures worldwide, whether we're talking developing countries or emerging economies, infrastructure is certainly one of the basic conditions for sustained economic growth and stability. Also, it is normal for an insurer with long-term products to increase its contribution to these type of assets. We also have, as regards our corporate social responsibility, a long-term position. Let me remind you of what we've done over the first 6 months of the year by announcing that we would increase the means made available to the AXA Research Fund to up to 200 million euros with this new injection. And this is a unique differentiating position for AXA versus many other enterprises, both in France and abroad. The effort to support long-term research in areas that deal with natural disasters, financial risk, health risk, social risk, to facilitate progress and research. This is also part of the insurer business. Now, to return more specifically to the results of H1 2013, our business is very well balanced between our three business lines. Of course, here we have P&C and life and savings and protection and health. You can see that P&C represents approximately 40% and asset management and savings around 34%. So this is a good spread of the risk here. This leads us to a solid, robust balance sheet. Our solvency ratio is extremely solid as well, is the most relevant, above 200% today, which demonstrates that we are, in fact, here benefiting now from the outcome of the strategy that we have implemented through Ambition AXA. Now, if we take the different business lines, why do we say that Ambition AXA works? Well, first of all, look at life and savings here on the left-hand side. You can see that in our business mix, when we look at what comes from UCs, the proportion of new business in UCs continues to grow, representing a little above 1/3 of all of our activities. General funds in savings that we consider to be less interesting for our clients in a context where interest rates are low. This activity that we wanted to gradually reduce in terms of importance is indeed now gone from 26% of new business in 2010 to 13% only in first half year 2013. In protection and health, our business has made also a huge progress of a little above 1/3 since 2010. So this is a mix that is evolving in alignment with our long-term strategy. Also here we have an improved combined ratio. And I should have said, as a matter of fact, that as regards life, protection, health, etc., margins have improved since 2010. The same applies to P&C. Combined ratio at 95.7% is the best that we have been able to post since the beginning of this decade and probably since the year 2000. Revenue up 4% in cumulated growth since 2010, with strong balance between corporate insurance, individual insurance in general, and car insurance. So growth in our revenue and increase in margins. We're also speeding up here, according to Ambition AXA and its pillars, our presence in emerging economies. If you take a look at these high growth markets, you can see that in life and savings, new business has increased by plus above 20% per half year per year since 2010, with a contribution to emerging economies to the new business of the group that now represents 16% versus 10% in 2010. P&C also represented H1 2010 16% of the group's revenue. Today is above 20%, with a growth rate of P&C circa 13% on a accumulated average growth rate in the value of our new business. This certainly is the reflection of what is happening worldwide, and this should continue in the years to come with highly satisfactory margins. The third pillar of Ambition AXA here, competitiveness. We said that we would be making 1.5 billion in savings, 2010-2015. We have actually gone beyond that target and are now at 1.7 billion. So we are quite comfortable with the idea that we will be achieving our economic goals in this area. And also in view of the investments that we are making on our P&C platforms in Asia, on digital as well, to continue to modernize and develop our business. All of this in terms of balance sheet management is supported by the continuance of programs that were started now several years back, which involve minimizing the level of capital that we allocate to traditional activities or to slightly lower margins than the average activities, to be able to reinvest on markets where perspectives for growth and margin are high. Over the first half year, two very symbolic illustrations of these efforts. The divestment in the U.S. of an old business portfolio of Moni that which we had acquired 2005-2006. We did away with this old business portfolio that was profitable, but where there was no real development perspective, for slightly under 1 billion euros. And in parallel, we decided to invest approximately the same amount on the development of a direct P&C insurance business in China by taking a stake of 50% in Camping. I'm sure that you know that the Chinese motor market is the first in the world. The Chinese buy 17 million cars per year versus 13 million in the US. We need to insure these cars. There is no significant insurer present on this market, and in view of the competitiveness of our direct business worldwide, we are the first international player with 10 companies established in 10 different countries and that are quite successful. And we believe that this is a very significant area for development in the future. Denis Duverne is now going to go into more detail on our different business segments, life, P&C, and asset management.
Bonjour mesdames, bonjour messieurs.
Good morning, ladies and gentlemen. I am delighted to present today the performance of each of our business lines, as well as the group's global performance and a few balance sheet indicators. We will begin with life and savings. First of all, as regards new business, we see growth of 9%, as Henri has just told you, over the first half year, grown plus 9% first in protection and health, where we've had a record inflow of 4.4 billion euros. As Henry indicated as well, we have demonstrated our capacity to cherry pick our products. We have seen a drop of 2.7% in net inflow regarding our general fund and savings. Initially, this number is the result essentially of performances in Germany and in Belgium. And acceleration took place in Switzerland, in Asia, and essentially in France. Now, as far as UCs are concerned, we have a net positive inflow of plus 2.1% for comp at plus 21% in the US as well as in France, with allocation of our clients to the UCs, which of course corresponds to the situation on the markets today. And also here, as far as life insurance is concerned, we have a progress of plus 19% and net inflow at 0.1 million euros. So we have an acceleration here in UCs and health, and we are much more selective as regards Euro funds. Now, if we look at the behavior on the different markets, on mature markets, we have had a growth of 8%, which is very impressive, very different from the past years. Very strong in the US, in Switzerland, but also in France, with positive net inflow over the first half year in France. And on mature markets, our margin is at 31%. Now, on very high growth markets, we can see a hike of 15%, which is even stronger in Asia, and particularly as regards ICBC, where we see progress at 250%. The margin is at 44%, up 3 points. So you can see that as regards new business in life, progress is seen all over the board, but more emphasized on high growth markets, of course. Now, the results in life insurance, over half of these results come from protection and health. As regards protection and health, we have a slight drop at minus 6% in results due to slightly higher mortality in the US and in France. But this is relatively cyclical and is not a major issue. As far as retirement is concerned, we can see here underlying earnings grow at 15%, and on UCs we have 100% growth, which is the result of the turnaround of the profitability of our American business that we had described in 2012 with a situation that was returning to normal. We now have the concrete transposition of this with a situation that is quite clearly turned around positively. Now, underlying earnings, of course, have grown at plus 12% for life insurance, and this result, once again, is in part due to U.S. performance, but we can also note good results in the Mediterranean and Latin American regions, in Japan as well, and a growth of 60% in results in Asia as a whole. Now, P&C. We'll begin here with revenue. The P&C revenue has grown plus 2% during H1 2013. This growth was 1% on individual insurance and 4% for corporate lines. This is aligned with the Ambition AXA strategy. We wanted to accelerate the growth on our corporate market. This is particularly visible in Mediterranean and Latin American countries where growth is at 10%, US and Ireland, Asia, and even in France where we have a growth of 3% in corporate insurance. Now, if we look at the different markets, we see that revenue remains stable on mature markets with a combined ratio of 95%, growth of 15% on high growth markets, with a combined ratio at 97.6% and growth in 7% in direct insurance, with combined ratio which for the first time is under 100%. So it is an all the more remarkable performance that it is occurring in combination with strong growth. You know that when growth is swift in P&C, we run the risk of deteriorating the combined ratio, but we can see that with direct insurance, we can do both rapid growth and maintain a combined ratio and a better position, in this case, under 100%. The group, of course, is continuing to grow its customer base both in direct and on high growth markets, and we're losing some clients on mature economies, but this was necessary in certain countries such as Germany and Belgium, where we wanted to turn around the combined ratio and improve it more quickly. Now, the combined ratio covering all financial years has improved by 0.8% at 95.7%. You know that our medium-term goal is at 96.5 by 2015, and we're slightly under this already. This is the effect of our strategy. Now here we need to talk about the underlying combined ratio that has improved. It has improved by 1 point at 97.5%, despite a growth in natural disasters, which represent 0.7 points in this total number. We were struck by floods in Germany that are costing us 72 million euros this half year. Other factors on the favorable results versus preceding financial years. We're at AXA because we provision our claims very prudentially is always a very favorable element. It is 1.6 points of contribution to the improvement of the combined ratio, a contribution slightly under H1 2012, where we were at 2.1 points. In all, the P&C underlying earnings have grown by 10%. This strong performance is carried by France, where growth is 18%, but also by the UK and Belgium, where growth is above 20%. You can also see a geographical result that is quite balanced between the different geographies of the group, quite satisfactory in P&C this first half year as well. Now, asset management. Asset management in the hands of AXA IM and AllianceBernstein have grown over the first 6 months of this year. due to the fact of a very positive net inflow of 12 billion euros, 10 billion at AXA IM and 2 billion at AllianceBernstein, a very strong positive market impact at 12 billion, slightly corrected by a negative exchange rate in view of the depreciation of the euro versus other currencies over the same period. The group manages a little more than 100 billion euros. Now, if we look at the results of AXA IM in detail, we see revenue up 12%. You see that net inflow is particularly favorably inclined at AXA IM, 10 billion first semester versus 5 last semester 2012, and also 1 billion at AllianceBernstein and 2 this year for the same period. What is interesting is that after 4 years of difficulties, we have 2 consecutive half years of positive inflows for both of our asset managers, which is, of course, here the demonstration of strong commercial policies, but also the performance of investments, not over 1 half year, but retrospectively over a year, 2 years, 3 years. So we say that we are, in fact, here walking away from the difficulties that we encountered in 2008, 2009 for our asset managers. Now, here results are up 24% for asset management, pulled forward by the growth of the revenue of 12% that I mentioned, and by the fact that the growth in spend was more moderate at only plus 6%, which of course is in itself a positive operational leverage. Now, global performance indicators, and I would like to remind you first of all of the numbers of our revenue. Total up 4%, a little above 50 billion euros. This is, of course, the result of everything that we've mentioned, with once again high diversification, quite positive one. The underlying earnings here have grown by 12% in life, 10% in P&C, and 24% in asset management. In all, the underlying earnings have grown by 16%, so it is an excellent performance over this first half year. Then now the adjusted earnings, which also show a growth at 26%, benefiting from a level of capital gains at 375 million euros, which include 151 million euros that come from the capital gain through the divestment of some of our shares at BNP Paribas. We've gone from 5.3% to 2.9% interest in BNP Paribas. This was planned. And now, as regards our net result group share, it is down 1%. Net result is an aggregate that we do not often comment in detail. We're not happy when it's good, but we don't present excuses when it's not as good. This result is due to the volatility of financial markets, because we have some coverage instruments that are not, from an accounting standpoint, qualified as hedging, and this gives us a slight drop in our net result, but this is not an economic loss. Also, we've taken into account 30 million of unrealized capital gains regarding the Moni divestment in the U.S. This will come in only during the second half year on the divestment in AXA Private Equity. Now, the balance sheet indicators, first of all, shareholders' equity. These always demonstrate a solid balance sheet, 51.5 billion euros. Slight drop in shareholders' equity because we have the realized and unrealized capital gains, and the capital gains on bonds drop when the market is as it is today, which is why this number is displayed. Solvency 1, very high level at 218%. The drop here is in fact, only reflects the drop of unrealized capital gains in our bonds portfolio. Economic solvency, relatively stable at 204%, down 2 points versus S2 2012. This 204% ratio would be at 208 if we took into account the impact of the divestment in Moni, which will be present in the second half year 2013. Now, gearing, also the divestments that were announced during the first half year will have an impact on the ratio, which is currently at 26%, but we will see their positive impact in the fall. Now, as regards our general fund assets, these are at 476 billion euros on June 30th, 2013. Quite continuous from half year to half year. You see that the state bonds are still at 45%. The notable change here, which is modest, is that shares have gone from 3 to 4%. We slightly increased our share in these particular investments. And our bonds portfolio has dropped because of the increase in interest rates. But as regards unrealized capital gain after participation to benefits of the policyholders and after tax, we here have reached a very comfortable level. Now, the investments that were made during this first half year 2013 as a result of the maturity date of some of our bonds in our portfolio. Each year we have approximately 50 billion euros to invest. We have invested 29 billion during the first half year to seize the available investment opportunities. In 2013, we've come back a little more to state bonds with circa 41% of our total gains, with a slightly increased investment in some peripheral countries such as Italy and Spain. Also, 10% of our investments cover loans. Henri de Castres mentioned the consequences of Basel III for banks. We have new opportunities now to invest in such loans. We have long-term engagements vis-à-vis our clients, and we therefore have set up more corporate mortgage loans for real estate purposes. And we are investing as well in alternative bond funds. We are a long-term investment in the economy, and we demonstrate this on a daily basis. Thank you very much for your attention, and I will now return the floor to Henri de Castres. Thank you very much. I'm just going to very briefly conclude and say that the results here are solid for this first half year. Showing an increase in business and margins. This is certainly a situation that we must continue to maintain regarding the key components of the strategy we are implementing through Ambition AXA and beyond, because the group's objective is not 2015, it's the very long term. Of course, we will always be extremely cautious in our approach, particularly because in Europe the economic landscape remains quite uncertain. But we are quite aware of the fact that the strategy that we are implementing must help us to continue to improve customer service and to reach satisfactory profitability levels. I will stop here, and we are now ready to take your questions, whether these are in the room or on the web. Are there questions in the room? And if you ask a question, please tell us who you are first. Yes. Lionel Garnier, Le Revenu. In view of your commitments to your clients as regards services on the general fund and the profitability levels that you are seeking, what is the margin today on the general fund and how is it evolving? Another question on ICBC, 250% increase over the first 6 months. What is the result in absolute value terms? And also, what is the level of profitability or break even? And also, the evolution in unrealized capital gains. Are you preoccupied by the potential increase in interest rates, and what influence can this have on your investment policy over the next half years? Many questions in one. Denis, we take the general fund, and maybe the issue as well on interest rates. Now, as regards the general fund, there are two ways to answer your question. The first would be to say that the margin on new business that we have through the general fund is turning around now at 10%, while it was at 5% a year ago. So this is the margin on new business when it is divided by new business under APE measurements. Another way to answer is our profit and loss. We can see we have indicated over the past few years that we were aware of the fact that because we manage a duration that is quite close, both to assets and liabilities, we thought that we could reach a margin of 70 basis points. And in the first half year, we were at 70%, whereas in 2012 we were 78, and we're now at 77. So it's just a few points difference. Also, we must do away here with a misunderstanding as regards the interest rate increases and on insurers, and to very clearly say that an increase in interest rates is favorable for insurers. If we take the different aggregated components on our underlying earnings, the impact in the short term is practically nil. If we take the embedded value, there is also a positive impact. So an increase of 100 basis points for us is of interest because it increases our embedded value by 5%. And the fact that we are exposed to the US interest rates and their fluctuations because we were convinced that the rates would be increased in the US, in reality, the embedded value is near to 50% during this first half year. We're not disclosing it necessarily, but also we have a positive impact of 9 points. The only negative aspect of rate increase is the net result. So press agencies here have titled a drop at -1%, and this is indeed the impact of these rates because they are considered as hedging, but they're not considered as hedging components. But in itself, it has no economic impact because when the rates increase, I would say that the value of our engagements to our policyholders drop. But unfortunately, our technical provisions are frozen from an accounting standpoint and remain the same. But globally speaking, it is the hike in rates is very positive for insurers, and all the more so that in the U.S. We had positioned ourselves for this rate increase, 10-year rates, for example, at 2.5% by the end of 2013, and they're already a little above this number. Now, ICBC is the life insurance joint venture that we have in China with the first bank in China. A little under 30% of their equity. There's a huge growth of 250% because the joint venture is revving up and representing 39 billion euros in new business, APE. and we were one of the foreign insurers there. There are about 25 to 30 of these in China. Now, as regards market share, and by far we are number one. If we look at the classification of all insurers combined, foreign and Chinese, we are now close to number 10. Very strong growth with business mix and a margin level that are quite satisfactory. We're extremely vigilant on these numbers because sometimes Chinese players prefer volume to profitability. In this case, it is not what is happening. We have a very satisfactory profitability level, which in our opinion confirms the value of the Chinese market and the validity of the choice we made in choosing a partner with tremendously powerful distribution networks all over the country. And 39 billion is a share of the much larger pool. And we're expecting to reach our end goal by 2015, which is really, really fast, because normally in life insurance businesses in traditional countries, it would take at least 5 and sometimes 7 to 8 years before we could bring in positive results. In this particular case, things will go faster. Any other questions? Yes. Good morning, Christian Plume from Radius. I had 2 questions. The first involves a systemically important institution. Do you consider that this is positive or negative? And secondly, as regards the current state of negotiations around Solvency II, are you worried about the fact that there may not be a final agreement? And because it seems that currently there isn't very much visibility on this issue. Thank you very much for both questions. On the first subject, I wanted to answer with a jib. In France, we say that select clubs must be criticized, but must also be joined. So this is, of course, something that is inevitable, although the insurance profession as a whole is convinced that these activities have no systemic entity or value. And in fact, AIG, for example, was impacted not because of insurance activities, but for other activities. So intrinsically, traditional insurance is not a systemic activity. We understand the regulators' desire to have greater levels of transparency on our business. We are one of the insurers on their list in view of our size and our diversification from a geographical standpoint. We are looking at this with interest and vigilance. Vigilance because we do not want this to mean that we will have accumulated levels of red tape to deal with in the future. And this will also allow, we're trying to work on the fact that insurers are factors of stability and drivers of stability on the in the economy. So we're watching this closely. As far as Solvency II is concerned, discussions are still on the way. Beginning of September, there will be a meeting. AXA and other large European insurers growing their business in different countries remain convinced that it would be a good thing to come to a balanced compromise on this subject, because if Solvency II were to fail, and if European states fail to get together on this issue, the risk would be that there would be 28 different solvency regimes. So for people who are present in a large number of countries, is far from being a form of simplification or a transparency enhancer. We certainly hope as a profession that our observations will be taken into account and that the discussions that will be picked up in September will bring us to a compromise, because in all we believe that it would be a rather positive thing if the compromise is balanced. This system must not create artificial volatility that has absolutely nothing to do with the reality of the economic business of insurers. I think that questions were asked clearly, and we are all hoping very much that the intergovernmental dialogue between the Commission and the regulators that will be picked up in September will allow us to make progress. Next question. Yvan Bess, La Tribune. Good morning. As far as France is concerned, what are you expecting of the future Euro growth contract? How will this impact your strategy? And also, what do you think about the creation of a file defended by the Minister of Economy? Two things. I am extremely positive as regards a Euro growth contract and not as positive as regards the file of the Ministry of Economy. We are, not just AXA, but all insurers, life insurers in France, are perfectly aware of the role that we and they play in our economy. The 50 billion euros here are a position that we need to defend economically and legally. A significant share of these savings are invested in the long term, and we consider today that it is in the interest of our clients to strengthen in their portfolio their share of genuine long-term investments as well as their share-based investments. We have seen a strong bond market that has rallied for years, and probably the situation is about to change. So insurers they already play an important role, but they can play an increasing role in the long-term funding of the economy. And the Euro growth contract is something that was put on the table by the profession to accompany the government in its efforts to gear the savings of the French citizens to more long-term products. It would seem that the situation is ideal to do this, of course, if we do not brutalize things, because the stock is vulnerable. It is essentially composed of significant size contracts and for the most part older than 8 years. So if we frighten those who save with a changing and slightly chaotic economy, they will take shelter in other forms of savings that will not be long-term. So the Euro growth contract is something we're really, really positive about. The Ministry of Economy's approach is something that we're much less positive about, explaining that we need here to centralize the savings population is something that covers 11 million people. Just to pursue some people who fraud is something which, in our opinion, is not at all intelligent, and it is not favorable to the return to growth and to the development of employment. Other questions on the web? Several questions. The first on life insurance. Are you worried as regards the multiplication of natural disasters worldwide, and how do you intend to deal with this? We'll take one question after the other. Thank you. We are not worried. We are professionally involved. The multiplication of these natural disasters is due to probably a cyclical evolution, but also quite largely the result of the behavior of human beings in general worldwide. It is certainly one of the reasons behind our funding of fundamental research in this area, and it is also one of the reasons for which we believe that insurers have a very important role to play as regards prevention. Something that we need to convince the financial markets and our clients on is that we're not just there to pay out compensation for claims, but also to work upstream and analyze upstream on analyze these risks and how to prevent these risks, how to avoid their happening. And we are looking into this quite attentively with a high level of interest to try to avoid these risks, which indeed are increasing. As regards asset management, what share is due to strong commercial performance and what share to investment performance? And how do you see the evolution in this business line? Well, in fact, the question underscores the two drivers of the evolution of performance of asset management. A strong investment performance, which is true at AXA Investment Managers and AllianceBernstein, give the arguments that our sales networks need to convince our clients. And the fact that we have returned to net inflow demonstrates that we have a certain number of products and management methodologies that respond to what our clients are seeking today, whose appetite for risk, by the way, is coming back. Over the past few years, we had suffered from their preference for bonds and passive instruments, but the gradual return to financial markets is something that is more favorable to us. As regards your investment strategy, the share of general fund has gone from 2 to 4%. Are you envisaging a further increase over the next months? And what is your thought on financial markets between now and the end of the year? No, we are not envisaging going significantly above 4%. This is already a one-third growth. As far as financial markets are concerned, as we said, there was a turnaround on the bond market, and this turnaround will, in view of the uncertainties at the moment when central banks will stop being as accommodating as they've been in the past, will certainly have an impact on bonds. And we must continue to be vigilant in the way in which we manage our portfolios. Also, we must encourage our clients to invest more in financial markets, which is what we've done. New question, Insurance Day. What does the Moody's report published this week bring to mind, and also what is AXA's position versus its European peers? I do not know the report by heart, but I must say that the feeling that we have is that Moody's is doing good work on the topic. We are among the European insurers who are strongly capitalized, highly diversified, and we have no particular comment to make on Moody's report. We cooperate with ranking agencies, and they know us intimately, so to speak. Any other questions? Yes, in the room? Masfatat from Reuters. You've acquired 50% of Tenping in Asia, which has strengthened your position. Are there other geographical areas or market segments that you may perhaps be interested in carrying out external growth operations? We are pragmatic. We are analyzing emerging economies that are not limited to Asia, although in terms of weight, Asia certainly represents a large share of these emerging economies. But Latin America and the Gulf region, the Middle East, the Mediterranean, Turkey, North Africa, where we have developed business that is growing, such as in Algeria. These are, and also Morocco, and these are areas that we are attentively focusing on. But our attention to emerging economies does not mean that we will no longer do anything on developed markets, because in these developed markets, there are segments which can continue to grow with satisfactory margins and growth rates. Our direct insurance business is the illustration of this. And in some countries, there may be the capacity to acquire additional distribution capacity. So, of course, focus on emerging economies, but here and there, sometimes there may be an opportunity to reinforce our presence in developed markets as well. Microphone, please. Microphone, please. Thank you. On economic ability, I'm sorry, I missed the beginning. There's a slight inflection during H1, and as regards external growth, you've talked about Brazil in the past. In view of the economic situation in this country, is there still a priority? And if it's not Brazil, would you be examining other geographies such as Southern Europe, for example? Yes, I will answer, says Denis. I honestly believe that when the economic solvency ratio goes up to 200 odd percent after the money divestment, we are here adding decimal points that have no considerable importance. Now, as regards the 206% ratio, economic ratio, I think that it would tend to increase in view of the contribution of results. It is negatively impacted because we've paid out dividends, and it is also slightly positively impacted because of the hike in interest rate, and slightly negatively because going from 3 to 4% in shares, we have, of course, slightly increased our financial risk position. These are the main parameters that we can mention as regards economic solvency ratio. In Brazil, as a JIB, do you know Offenbach's operette called La Vie Parisienne, where a Brazilian is singing, "I will bring you my fortune to nibble"? And we are interested in Brazil, but we are reasonable and will not let our fortune be nibbled by the first opportunity. We are looking into Brazil because it is the only emerging market where for the moment we are not present, but we are looking into it pragmatically. Growth has slowed on that market. Perhaps this will offer slightly more reasonably priced opportunities, but we should also look at how we ourselves can develop a certain number of product lines where we can have a specific presence in Brazil. Jean-Laurent Garnier is at the heart of these discussions, and it is certainly a market where we would have an interest to be, but it is not a market that we will rush into naively just because we get one opportunity. I have another question on a different subject as regards investments and the use of balance sheet to invest in corporate debt. There was a very clear movement of the industry, which, as a matter of fact, was blocked as regards specific reform. 5% of investments, for example, for corporate loans. How far can you go, and what are the budgets that you could invest this year and next year to work on this? You're talking here only about a French regulation, and you know that the group is present in 57 countries, and regulations are quite different from country to country. Investment to corporate debt, unlisted, of course, is not novel for AXA. We've been doing this for a very long time in the US, for example, where regulations are different. The issue, as it was covered by the government, came from a provision of the insurance code which made these assets inadmissible, and this is an anomaly that is currently being corrected, so we're satisfied with the change. I'm not at all informed of this 5% limit, but if it did exist, would not be a major problem for us anyway. I'm not at all informed as to this. Laurent Flagot, Les Echos, I have a few questions. Can you specify the share of UCs in new business in France? Around 30%, says Henri de Castres. And before, at the lowest point, I think we were around 11 or 12%. Thank you. As regards unrealized capital gains in your bonds portfolio, end of June, we saw the number. What about the beginning of the year? 3 billion more. 3 billion less or 3 billion? No, it was 11%, and we're now at 8%. And unrealized capital gain over your entire portfolio, how have they evolved? Well, you have it here on the slide. And in your documentation, it's gone from 11.2 to 8.3. So we dropped to 2.5 billion in all. And just to return to interest rates, we can understand that in the long term, this is quite beneficial for insurance. But could you tell us in the short term, what are the impacts if rates are increased too quickly? Well, the increase in rates is favorable. The only event that could be unfavorable for us would be extremely fast hike, for example, 300 basis points if rates went from 2.2 to 5 in France in one fell swoop. Well, then, of course, we can always wonder whether some clients wouldn't prefer, well, if it went up to 5% on long-term rates, but also very strongly on short-term rates, because this would be a sign of a very strong market disruption. And our clients may, in some cases, decide to apply arbitration to life insurance when it comes to its when the contract comes to their 8th anniversary. And then, of course, we run the risk of strong contract cancellations that we provision. We've never had a mass wave of cancellations of contracts like this, except for those insurers who were in very poor health. In Japan, many insurers went bankrupt end of the 90s, beginning of the years 2000. And the rate of buyback in insurers that were in a slightly better position reached 15% a year, whereas they're on average around 7%. So we are very well prepared to face up to this sort of situation, but it seems quite improbable. But we are getting ready because it is our business to be ready for the most improbable. Amélie Laurent Agéfi, for corporate funding, you talked about several dozens of these companies funded via you. Can you tell us how much this represents regarding the budget allocated by AXA? And also in France, can you tell us how, can you give us more detail on the spread of the inflow during this first half year? Now, as regards corporate loans, this represents between 1.5 and 2 billion euros to date. As regards the spread of inflow in France, I am going to beg out. Nicolas, could you give us an answer, please? The net inflow, I think that we're slightly negative. Negative net inflow in euro, positive on UC, and positive on protection. Knowing that in our net inflow, we also have many contributions from group savings policies, strongly invested in UCs for this half year. Any other question? Nino Renon, Les Echos. I have a question on your banking activities. Could you tell us a little more about this? And tell us what your projects are for your new brands. Nicolas, do you want to answer this? Soon is a bank for the young generations that will be launched end of September. We're going to organize an internal launch for family and friends beginning of September to be able to correct the last bugs and see how the instrument actually performs. And then in end of September, we will launch the bank particularly for people who have already registered on site. This is what we would be planning for the moment. We haven't really scheduled a media plan as regards launching. For the moment, it's only viral marketing, and then we'll see. If it works, then we may work on a media campaign, but for the moment, this is not planned. Today, we have 6,000 people that have registered online for this bank. Any other questions? No questions on the web? No regrets? Okay. Thank you so much for having come, despite the fact that it's August 2nd, that it's hot out there. For those of you going off on holiday, enjoy them. And thank you again.